Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday, the 6th of December. We're a little early today because of scheduling difficulties, but I hope you enjoy today's broadcast. You know, personal Market Club coaching is not for everyone, but maybe it's right for you. You can give us a call. It's a free consultation, a free call. The number's on the screen, 877-219-1482. So give us a call. I think you may enjoy talking to one of our representatives and helping you understand what this program is all about. Volatility, uncertainty, Europe, and now Darden Gardens. What's an investor to do? Well, the way we look at the markets is pretty simple. And that is we look at our trade triangles every day as they have an excellent track record on what we call getting it right. Are the trade triangles right every time? No. Nothing in the investment world is right every single time. Even CNBC's Mad Money Jim Cramer only gets it right 50% of the time. And I know that our triangles are higher than that. Let me give you a specific and timely example of just how powerful our trade triangles are. Today, Darden Restaurants, symbol DRI, announced disastrous results and guidance that quite frankly shocked the markets. So how were our trade triangles positioned in Darden Gardens? You would either have been totally out of the market or short. Darden Gardens, by the way, opened this morning down over 10%. We'll be looking at Darden Restaurants today in our video market review, so stay tuned for that. Now let's go to the charts and the video and see how we can create and protect your wealth for the balance of 2011. So let's go to our portfolio, and you know how we do that. If you watched this show before, you simply go here. That's my home page, Adam Hewison. This would be your home page. If you're a Market Club member, of course, it will say your name here. And you have all your tools here. You have basically the 7 tabs right here. You have the trade triangles right here. Market headlines. It's pretty much all here for you. Plus you have access to our 3 very powerful, easy to use portfolios that we track every day for you. So let's go to our portfolio manager, and that's quite simply to do. And here we are. We've got the S&P 500 plus 60. We have the weekly and the daily up, the monthly down. It's a 60, which means it's a trading range. And we're at the upper end of the trading range, it would appear. Certainly the Donchian trade channel right here is at the upper end. And I think probably we may go a little bit higher, but I think for the most part, we're getting to the point where it's getting to sort of somewhat we call thin air. And we can see this market having some difficulties right around here, probably for the next week or two. I think the market's going to be firm to steady to firm for the next couple of weeks. And then obviously holidays will be here, and then the markets will be very, very thin. And one wants to be very, very careful. The key level today is the 1240 level on the downside, about 16, 17 points lower. If we go below those lows, we'll have put in an interim top. Our daily trade triangle will turn red, and that'll push this market a little bit more on the defensive. But I think for the most part, we'll probably see this market stable. So let's go to our next market. And the next market we're looking at is silver. Silver is actually minus 90. All the indicators are red, which tells me that the market's looking like it wants to go lower. Now, if we get a strong stock market in 2012, I don't think we'll see silver doing much of anything except maybe going down, perhaps back down to the 20 level. Now, the key thing here in my mind is you had a pattern. Let me put my telestrator on here. You had a pattern that we sort of have seen in silver before, and that is we sort of rolled over here. You can see right here, we sort of rolled over here, and then we had the big drop. And it looks to me like we're having something very similar, is we're rolling over and we're getting ready for a big drop. Now, the question is, what's going to spark that? And this, if you look at this closely enough, you can see this sort of like a little mini top going here. Clearly, this level 30 is a key support area. We need to go below that before we see some downward momentum in this market. So just watch those levels very carefully. I think they're definitely worth watching. But it looks to me like we're still seeing this market really not performing that well. And the same goes for gold, but not quite the same. Gold still has a monthly trade triangle from 1430.90, which is still very much intact, still very positive. But we're seeing in the gold market, we're seeing sort of a little bit of a follow type of a tendency to want to roll over. It's not really going high. I think the highs we saw back here in the the August-September period are the highs for the year now. I don't think we'll see this market broken, these highs broken until sometime in 2012, if at all. And if it does happen, it'll happen, we think, in the first quarter or the early part of the second quarter, either the maybe the May-June period. That's sort of what we're looking at right now, cyclically. But nonetheless, we need to get these other markets in a green composite, so we have a plus 100 to get a strong upward trend. Right now, we're just sort of eroding here with lack of any strong interest. Certainly the interest in Europe is seems to be on the back burners, not so much. It seems like maybe Europe's perhaps getting its house in order. We'll have to see what happens. But generally speaking, this trend is the key level here, of course, is going to be these lows right here. If we see these lows taken out, and the low is 1867, the PSR today is 1867 again. If we see this taken out, it's going to be a little more pressure on the downside. But we may be finding support around the 1700. Markets tend to find, in gold anyway, find support around the big numbers. If you pay attention to, you can see right here, 1800 was the big resistance level, 1600 was a big support zone, 1900 was a problem. But you see the big numbers are really what people key on, especially professional traders. So let's take a look at our next market. The next market's going to be copper. And copper has been bumping up against the top of its, actually, we're looking at crude oil, I beg your pardon. And let me go back. There's the copper market. So we got to the top of the sort of Darden trade channel. We sort of popped around there for the last 5 or 6 days. And we had a little bit of pressure early today. We are oversold. The longer term trend is down. The short term is down. The weekly is up, indicating a trading range. And of course, in trading ranges, we want to use our we want to use our Williams percent R indicator, which is right here, and our Darden trading channel. So we're at the top of the channel now. I would say there's a good chance we'll see this market come under a little bit more defensive action, particularly with these highs that have sort of so stopped this market on the upside. And you're looking at highs right around the 3.63 and so forth. So I think that's going to be a resistance level. It needs to go through there if it's going to continue up. But you can see it was a turning point back here. I think it's going to be a turning point right here as our longer-term monthly trade triangle still remains on the defensive. Now let's go to crude oil, because that's a pretty interesting market right now. And look at these. Let me go in a little bit closer for that. Look at how this market's just the last 3 days has been very, very tight ranges. These are almost like this. This is definitely a market where you're seeing an equilibrium. And what I mean by equilibrium is that you're having sellers and buyers sort of trying to fight to the next swing. But this market here, obviously the 100 level is going to be psychologically a big level. If we close below that area, then I think we'll see some more profit taking coming into the market. We are in an oversold condition, overbought condition, I beg your pardon, and we're very flat in the MACD. So I'm not sure which way things are going to go, but certainly our trade triangles are still indicating a positive outcome for this market. Our monthly kicked in at 100.07. Market's just above that a little bit. Our other markets kicked in at 87.61 on the weekly. So we've got some nice indicators there. It's unclear as to what's going to happen. Maybe we'll go sideways for a while and just regroup to go higher later on. But obviously this is a resource that has a finite amount of resources. And also, if the economy gets better both in China and Europe and I should say Asia and in Europe as well as the States, then I think we'll see more buying pressure on this market at the upside. So we'll pay close attention to that. But nonetheless, our trade triangles are 100% bullish, or 90% bullish right now. They were 100% earlier. And we do this dynamically, so these change all the day. It doesn't just stay here for the day. It does change, of course, with market action. And also, we also have our talking chart technology. If you've never heard that, you just basically click here, and it really tells you what's going on. I'm not sure if I have my speakers on, but if I do, let me just give you an illustration of how that works. Yep, we have them on. So you just click here, and
this chart is showing a score of plus 90, which indicates that this market is in a weak uptrend. Keep an eye on the chart analysis score to possibly hit a plus 75, which may indicate a short-term reversal. And always use proper money management stops.
So there you have it. We do that on over 250,000 symbols throughout the day. So it's a very, very cool thing to have. It's like we're always with you in thoughts and also in our talks on the market. So let's go to our couple more markets we want to look at today. We've got kind of fun day for us. And here's the Reuters CRB Jeffries Index. This is a commodity index, of course. It's made up of crude oil and several other major commodities, but you can see it's a minus 100. It's sort of rolling over. We weren't enthusiastic on the upside when this market was going higher. I think we'll probably go down and test this level again around the 306 level, 307 level, at least in the short term. But it looks to me as though this market's just rolling over again like it did here. And if we go down to our indicators, you see it's very flat on the MACD, and we just not overbought, not oversold, sort of somewhere in the middle. So I think we have to rely on our trade triangles there to see if we're going to see a test of the lower end of the Donchian trade channel. So next market is the Kinder Morgan. I wanted to share this with you because this is, remember we talked about this trade on Friday. And basically, I'll tell you exactly what happened. We bought this market at 31 on Friday. We exited on Tuesday, which is right here on the opening, and the opening was 31.08. So we basically made 8 cents. Not exactly a stellar trade, but it was the let's say a break even to maybe a few pennies. But nonetheless, it wasn't a losing trade. And this is our 52-week rule. You're going to buy highs on 52-week, and then you're going to sell them on Tuesday on the opening. That's the plan. So the next market we looked at was Home Depot. Again, we bought the market at 39.96. We exited this position at 40.09, made 14 cents, a little bit of profit, very, very small, not really negligible, but you didn't lose money. That's the key thing. Quite often these markets can, when they get very strong, you can make 1 or 2 or 3% just overnight over the weekend, which is a nice way to trade because you have very little risk. And most people don't think of carrying positions over the weekend as being risk-free, but normally if you have a market that's closing very, very well, I would have preferred to see Home Depot as well as Kinder Morgan close right on the highs. It didn't do that, but it still was a 52-week high, and you can simply see that. You see how it's trending up very nicely there. So again, it's a great rule to follow on Fridays. You can look at that through our Smart Scan. You just go up here to Smart Scan, and then you basically click there, and it'll show you all the 52-week highs that are occurring that day, and you only really want to look at that on a Friday. I think it's the best day to look at it. Now let's go to Darden Gardens, because this is Darden Restaurants is Olive Garden. Very nice facilities, but I'm not sure that they're seeing much traction. But all our trade triangles are negative before the announcement came out. The announcement was a shocking announcement. It showed that they've lost market share. Their projections were down. I mean, everything was wrong with it. And of course, they paid the price today. You went from around 48 down to 42.26. So a lot of pressure. We're short from 46.8053, 46.01, and 47. So you can see basically all of our indicators are negative, and it shows you the power of the trade triangle. This is what I was saying before when we started on today's show. How powerful are they? Really, if you follow the trade triangles, I'm 99% sure you will make money during the course of the year. But you have to follow them. You have to be disciplined. You can't listen to all the rumors, innuendos, Cramer, or anybody else. You really need to follow the trade triangles, because in the end, it puts you in a very disciplined, structured approach to the markets, and that's the way to make money. So, hey, this is Adam Hewis, and don't forget, if you have a chance, if you want some personal one-on-one coaching, give us a call. It's a free consultation. The call is free, 877-219-1482. We're doing the show early today. We'll be doing it early tomorrow morning, so stay tuned for that, because we have some other engagements. But we're doing the show around about 11:30 Eastern Standard Time tomorrow. So